It's November the 5th. It's election day. It's a big day for the financial markets. I'm going to run through some of the trade ideas I have for my subscribers today. Gold is my favorite market. And there's been some developments here. We've got this big bearish engulfing candle from last week. That gave a little bit of a negative tone to the market. Although once we broke higher, which I think was on Tuesday last week, it did look very positive and gold really should have followed through. I thought that was going to be the start of the next leg higher in the bull market. However, it wasn't to be. By Thursday, we had this big bearish engulfing candle. We made a new all-time high on Thursday. We then collapsed. We took out not only Wednesday's price action, but also Tuesday's price action. And we engulfed 2 days of price action, which is pretty significant. We closed below the previous all-time high for the week before at 27.58. The break above there was our buy signal initially. But obviously we've collapsed below there. We collapsed below the Tuesday low. So it's pretty significant. Now, on Friday, we tried a recovery. And as you can see from this candle, I really should be opening this chart up a bit more. As you can see from Friday's candle, we had a doji where the market probed higher and then collapsed. So again, closed down on the day. Another negative candle. The bulls tried to take control again. They couldn't do it. And the bears pushed prices to close lower on the day. Okay, we then closed lower than Tuesday's low. So another negative. By Friday, we were closing at a 4-day low. Now, since then, Monday, Tuesday, we've only managed to trade sideways. We're not managing to get any sort of recovery. The dojis indicate a balance in the market. The bulls don't have control the way they used to. For example, after this big bearish engulfing candle, we saw some decent green candles. We're not getting that. So I think there is more of a negative bias. I'm not saying that gold is going to collapse. But I am saying that there seems to be some profit taking in gold. Maybe there are just too many longs believing that 3,000 was a foregone conclusion and we were just going to go straight there. And now suddenly they're caught underwater, not feeling so confident. And it does look like the bears are starting to get a little bit of an upper hand. Key level on the downside is obvious. 23.6% fib around 27.15 coincides with all these lows for this 5-day period. And the low of the bearish engulfing candle. So we break below there. There should be further downside in gold. Silver, less easy to read and certainly nowhere near as strong as gold. We've reversed. We couldn't hold on to the gains. Again, some big red candles on this chart over the last week or so, end of October, beginning of November. We're now trading below the early October high. So this has more of a negative bias, I would say, than gold. If you are a subscriber, you will have my trade ideas sheet. This is published every morning for my subscribers before the market opens in Europe. And I'm going to go through some of the trades on there for you now. Actually, we had a great trade in gold yesterday. We were selling up around the 27.45, 27.48 area. We caught the exact high for the day. That was just a scalp trade where we were trying to nick 10 points profit on gold. And it did dip to the 27.35 target. So that was a nice profit on the day. And we were also selling silver around this 32.80, 33.00 area. So we caught the high for the day in silver as well. And we did turn lower, hitting my two targets of what were they now? 32.50, 32.35. So that was a pretty good day trading gold and silver. It is incredibly hard to find Forex pairs that are trending in one direction and not just stuck in a sideways trend. If you've been trading Forex, you know exactly what I'm talking about. Cable is in something of a bull trend, a very gentle bull trend. And I must admit, if you'd run longs from December 22, you'd have really struggled to keep them. We're not really that much higher, are we? What's the high of this peak of December 22? 124.45. We're trading at 129.83. Okay, we're 500 pips higher. But when you consider that's almost 2 years ago, cable really hasn't gone that far. Anyway, I can describe it as a bull trend. You can see on the daily chart, 200 moving average, 200-day moving average has been flatlining from well before 2022, 50-day moving average coming up to meet the 200-day moving average. That's normal. 100-day moving average also flattening out, coming up to meet the 200-day moving average. This is what happens when markets trade sideways. The moving averages all tend to flatten out and converge. The green 500-day moving average is moving down towards the 200. So eventually they'll all meet if this continues. But this is important. This is why you have to look at longer term price. If you were here looking at this chart, you wouldn't really have any particular clue what to do. You'd maybe be hoping that the 200-day moving average worked to support, which it did do yesterday. But the real key to this chart is going all the way back to 2010, going back 14 years or so. Where are we now? Going back to 2024, actually. Okay, going back 10 years. So that peak that we had in 2014, you join that trend line, to the peak in 2021. And you've got this downward sloping trend line, which defined that bear trend that we had. We broke above that in August. I thought that was a good buy signal, and I thought the market would take off. However, we failed, and we are returning to that trend line. We made a low this week at 128.41. Now that is slightly annoying because on the daily chart, I have that trend line slightly lower down here at 128.25. So I had a buy area of 128.40, 128.20. We didn't quite reach it, although we got to within 1 pip. We got to 128.41. Pretty accurate. So I'm hoping that this little short-term bear trend that we've had since the beginning of October continues, and cable reverses and comes down to test that buy area. And then we will see if this really is a bull trend and if it does bounce off that very important support level. Dollar obviously could be volatile depending on the reaction to the election overnight in the US. And sticking with dollar pairs, the Australian dollar versus the US dollar also has a long-term trend line that we must be aware of. This one goes all the way back to 2011, so it's a bit longer than the cable trend line. That's about 13 years old. We tried to break above there in October. I got quite excited about it. It was a big level because we've got the 23.6% fib going back to 2011 as well at 68.21. We've got a shorter term trend line here, as you can see if I open this up a little bit, going back to, well, it's still going quite far back. That goes back to July 23. So that is over a year old, just this trend line. So this big green candle, when we broke through the downward sloping 13-year trend line and the 13-month trend line, this looked very significant. This green candle on the weekly chart was important. We had very much cleared those trend lines and that 23.6% fib at 68.21. For me, that was a buy signal. But I guess we needed to get through the 200-week moving average to confirm it. We didn't. We got this bearish engulfing candle the following week. And of course, since that bearish engulfing candle, we've fallen every week. Now, we're starting a recovery. I'm wondering if we can now push back up to that 68.20, 68.40 area. That will be key. Maybe on the second attempt, we can actually break through there, get up through that 200-day moving average, which is currently around 69.35. which coincides pretty nicely with the peak that we had in October. You see what I'm saying? This would be a big buying opportunity and a big longer-term swing trade opportunity if it materializes. We've been going sideways for so long. The dollar has been going sideways for so long that we are due a breakout. With the focus on the US election, let's stick with the dollar. I'm looking at the dollar index. This is something I have been following very closely for obvious reasons. Now, we have been stuck in this sideways trend since December 22. I could say that this is a 2-year-old sideways trend. Frustrating, difficult to trade for me, not the kind of trading conditions I like. I'm a trend follower, but I don't like sideways trends. Now, we tested this lower trend line here. It was quite crucial. We held the 200-week moving average and we've had one heck of a bounce back. I think that is due to too many speculative shorts in the market. We did have some bullish data out of the US in recent months, especially on the employment front. And with inflation being quite sticky as well, maybe there is less scope for rate cuts than we thought there was back in the summer. So we've had a positive reaction for the dollar over the beginning of the autumn. Now, we've hit this trend line, which goes back to April 24. We've hit the 38.2% fib. We have bounced as far as this trend line going back to April 24. You can see it's held. We had a doji last week and now we are retreating. So that's turned out to be a good resistance level. I guess movement in the dollar may well depend on who wins the election. And I'm not even going to speculate on that, but I'm just going to show you that a break above 105.60 could be quite bullish for the dollar. And here's where it gets really confusing. I'm going to take these fibs off here. Actually, these are not necessary. The euro versus the US dollar is usually the one that tracks the dollar index the most because the euro is the most heavily weighted currency within the dollar index. You can see it's a kind of a mirror image. We have been stuck in this sideways trend since certainly the end of December. I don't know what to do with it. I'm waiting for a breakout. I think it's going to come soon. I'm not going to guess in which direction, but when I scrunch the chart up, we do have a similar situation as we do in cable and the Aussie dollar with longer term downward sloping trend lines, which are very important areas. We've got one going back as far as 2008. That's a 16-year-old trend line. We've got another one here going back to 2011. That's a 13-year-old trend line. So these are crucial areas, and they do also, for the euro versus the US dollar, coincide with the green 500-week moving average. This is why you have to be aware of your longer-term charts. You've got to take a look at least once a week or once a month to see what's going on. That's why we've not been able to get through 112.00. And so I'm now just waiting to see if we do break up through 113, and that would be a really nice buy signal if we get it. But while we're doing nothing, trading sideways, I'm just going to leave it alone. I'm going to finish up now with another sideways trending dollar pair, US dollar versus the Canadian dollar. You can see we've hit the upper end of the recent range indicated by the trend line and the peak up here in October 22. We had sell orders in there at the beginning of the week. They're working really nicely. As you can see, the market has reacted off the trend line. A very simple trade idea that is working really nice for us right now. How far we go down, I don't know. I'm just happy to have caught the peak, and we can see how far we can run this trade. This is an ideal trailing stop strategy where each day as we head lower, you just bring the stop down, maybe to above the previous day's high, something like that. And then it gives you the opportunity to run the trade because you don't really know how far down we can go. That's impossible to project. So with the trailing stop strategy, it keeps you in the trade. As long as you keep the trailing stop wide enough, it can keep you in the trade just in case we do get down to 137.10, 136.80. It's certainly possible. The only way to capitalize on a big move in this situation would be to have a trailing stop strategy. I did a video about my trailing stop strategy, so do have a look at that on my YouTube channel. Have a look at my website, daytradeideas.co.uk, if you want to subscribe to my signals and follow my analysis on a daily basis and copy my trades. Thanks for watching. Please do like, share, and subscribe.